Hi traders, welcome to another episode of Smart Money series. In this video, we are going to see how the smart money played their game today and how the retail traders got trapped by the movement of the smart money. So let's begin the video. Friday, US market crashed. Nasdaq fell 2%, S&P 1%, and Dow Jones 0.5%. So due to this reason, Nifty opened a decent gap down of 100 points. So the global negativity factored in the Nifty by the morning itself. And after the opening, the first 4 candles are a good bearish candles, and in these candles Nifty also broke the previous day low. But the bias for the day is bullish because the Friday's candle was higher than Thursday's close, and also it is a very good bullish candle. So the bias for today is bullish, so we should not trust any fall that occurred in the very first very few minutes of market opens. So when price broken the previous day low, most of the retailers will thought that today is going to be a bearish day and the market is going to crash, and that will not happen most of the times. So whenever we are seeing a bullish bias, when the previous day low got broken, we can see a very good reversal, and that is what exactly happened. So this is the candle got broken the previous day low. I will mark it as PDL. Most of the retailers will go short in this candle, or in this candle. These 3 candles are the very good shorting opportunity for the retailers who follow some breakout systems, 5 minutes breakout, 15 minutes breakout, so on. But market showed very different colors. The smart money showed a clear trend by sweeping this 5 minutes swing point liquidity, and also it reversed the bearish fair value gap. So normally fair value gap is an indication of the presence of smart money. So whenever we see a fair value gap, so we can easily say that smart money entered into the market aggressively. So that is what exactly happened in the morning. But when price got broken the previous day low, the smart money changed their mind and they decided to trap the retail traders. So it is a clear bear trap. So when price inverse this fair value gap, I expected a very good move on the upside, then that is what exactly happened. So after inversing this fair value gap, price also reversed from this inverse fair value gap. You see, this is where smart money entered aggressively, and it easily taken to the today's high level. So in between also we can see some bullish fair value gap. So this is the bullish fair value gap, and again it is a very good bullish fair value gap, and this also a very good bullish fair value gap. And since today's bias is also bullish and bear trap was happened in the morning, every 5 minutes bullish fair value gap respected today. So you see, after 2 p.m. there is a very good crash happened in the market. Nifty fell drastically, but that fall is happened to fill the 1 hour fair value gap. So today we can see a very good fair value gap formed in the 1 hour itself, and when Nifty fell, this 1 hour fair value gap also got filled, and it also gave a good retracement towards the day high. But since there is no much time, it swept the today's high as well, and it's also ended at the 26,014 mark. So this is what happened today. Today clear bear trap was happened in the morning, and it trapped the most of the retail traders by giving a fake breakout. Okay, now we will discuss how much 1 minute order block got formed and respected. Initially the first order block got formed, this one is this at 9:21 a.m. but it is not get respected. So whoever took this entry, their stop loss will be hit. So it is a stop loss trade. First trade is a stop loss trade since it swept the liquidity and also it gave a trend change. So whenever price came to this order block, already price swept the liquidity, and also it is not a trend change. Whenever price from higher high, that is a trend change, but it is a very good entry opportunity. But eventually this is the stop loss trade. But after that, price changed the trend, price from the higher high. And here you can see this order block got respected. It is a very good move of 37 points, and again this order block also got respected, maybe. Okay, this is also gave a 47 points move. So as a scalper, we should not focus 47 points move. 10 to 15 point move in premium or 20 points move in spot is more than enough to make a money as a scalper. Here also this order block got respected. It gave 25 points move, but order block is a one-time tradable instrument, and this order block is not respected, it is mitigated. But after mitigating this order block, price went below and reversed from this fair value gap, exactly this fair value gap, and this order block is not touched. So most of the times price will reverse from fair value gap. Rarely it will go to order block, but whenever it goes to order block, we will get a high risk reward because of the size of the order block. So that is why I prefer order block over fair value gap for scalping. So then the day high got broken, so it is a very good bullish sign. Then here this order block also got respected, but only gave 18 points move. But even though order block is a one time tradable instrument, again price respected this fair value gap, but it is not a very good opportunity to enter since it is a second touch. It is a 16 points move. Then this order block also got respected. It gave a very good 30 points move, and then it is a choppy price action. So this is where the price broke the day high once again in the bullish trend. Again after breaking the day high, immediately reverses and form the lower low. Then so this is some huge order block. This got respected multiple times, but this is where we got a very good reversal and it gave a 44 points move. Again at the end of the day, it also closed near the order block. So we need to see how the price action forming today. If in case of any flat opening, this order block may work tomorrow, but if it opens on a gap up or gap down, it will not have any effect by tomorrow morning. So these are all the 1 minute order blocks got respected and disrespected today. And also we seen how price action formed and how smart money trapped today. Next we will analyze the price action in terms of SMC concept in daily time frame. So what is happening here? It is a clear consolidation. Market is just in accumulation phase. It is just taking retail traders liquidity. So what is the direction of the market? Usually the direction, how we can determine the direction of the market, whether it is going up or not, by seeing any fair value gap. If is there any fair value gap in the daily time frame, we can say that it is a bullish or bearish. But what is happening now after this bearish fair value gap? So this is where first bearish fair value gap got formed after reaching the all time high. Yes, no. So this is when the all time high got triggered. Before that, before touching the all time high, yeah, bearish order block got formed and it was mitigated first time. Okay, so it is inverse. This is now an inverse fair value gap, inverse FEG. So maybe okay, I will drag a little bit. After that, price formed a bearish fair value gap. So this is FEG, and in this candle this is also got inversed. So I will consider this also an inverse FEG. Okay, whenever price inversed the FEG and it is not breaking any structures, it is not breaking any highs, we can easily conclude that the market is directionless, it is in accumulation phase. So whatever happens within this range is an accumulation. So now market is trading within this range 26,200, and this is the swing point liquidity got created on 10th of December, Wednesday. So this liquidity got swept by previous Thursday, which is on Sensex expiry, and then now market is moving where to this level of liquidity. So whenever there is no fair value gap, it will move between swing point liquidity. So if it reverses from here, it should go till 26 to 200, or it may consolidate within this range. We cannot predict how the market is going to behave within this range. It will be choppy most of the times, because whenever price is in accumulation zone, it may go up a little bit, it may come down a little bit, but overall the direction will be in sideways only. So we should not trust this price action. Either now this also created a swing point liquidity. This Thursday's low is also now a swing point liquidity, and 5th December and 11th December, these are all the ranges formed now, and now price is accumulating between this range. So we need to see either of this level got broken to witness the further price action. But market is trading, even though market is in accumulation stage, it is trading with bullish bias. That is why we are seeing this kind of bullish candles. So, and also the direction now, since it is this liquidity got swept, we can expect a price to move in the opposite direction liquidity. Either price will move from one fair value gap to another fair value gap, or one liquidity to another level of liquidity. Here liquidity is swing point. So now price is moving towards this swing point liquidity in a sideways way with a bullish bias. That is the overall direction of the market. So we need to see how the price is going to react in this liquidity, whether it is going to sweep the liquidity or ride the liquidity. Based on the reaction, we can decide the further market movement and direction. So this is what it is. So now the market is consolidating with bullish bias, and it is gravitating towards 26,200. So this is the entire analysis for today. And now we will look for retail traders liquidity. So usually in the morning video I will show some lines, and in this video I am going to draw these lines in front of you. So horizontal line. So this is the first liquidity, 25,694, and this Friday's high also very good liquidity. Here also most of the retail traders went shorting the Nifty, and this is also a good liquidity point. This is also a very good liquidity point. So all this line I draw it on 1 hour time frame. For intraday we need to go to 30 minutes or 15 minutes. So in 30 minutes also we need to see the liquidities. So here I can see some liquidity, here I can see some liquidity. So these all are swing point liquidity. I just marked the swing point liquidity barely. So today's high also a swing point liquidity in 30 minutes time frame. So as a scalper, if you move as a scalper, we need to reduce the time frame to 15 minutes time frame. So this is a liquidity, very good liquidity. It is a very good liquidity. It is a very good liquidity. And this is a very good liquidity. So if you are a positional trader, you should only look for 1 hour or 1 day liquidity levels. So if you are an intraday trader, you should focus morely on 1 hour 30 minutes liquidity, and if you are a scalper, you need to focus on 15 minutes liquidity. So along with it, you can also consider day high, day low, and previous week high, previous week low, previous month high, and previous month low as well. So these are all the important liquidity for tomorrow's price action. Based on your time frame, you can select whatever the liquidity you want. So that's it, guys. Hopefully you like this video. If you really like this video, click a like, or if you have any doubts, comment it and I will try to clarify it, and also share this video to your trading friends. Thank you.